Oh, look at, we got some shout outs here in the chat. The Alchemist says, the newsletter is amazing. Love the newsletter, says Chevy Jeff. Thank you. Thank you so much. So again, that link is down below in the YouTube description or down below in the replies section of my Twitter. And the courses on building your wealth, big coupon. The expiration is 2 weeks away. Email us at staff@meetkevin.com if you have bundle up questions. Keep in mind, course members can now shadow for a pretty substantial discount. And that's a course member only benefit. You can see that at meetkevin.com. Okay, here we go. Wall Street expectations for inflation, 0.3. Wall Street expectations, that's for month over month. Core month over month, 0.3. CPI year over year, 3.1. CPI core year over year, 5%. Kevin's expectation is looking for a 0.3% month over month and a 0.2 on the core. Here we go. We got nothing yet. Come on, come on. It's always so intense, that minute. Sometimes it takes like 15 seconds to actually show up. Here we go. Core year over year comes in low, 4.8. I don't know why the other numbers haven't come in yet. 4.8 is the core year over year. 0.2. Let's go. Wait. No, that's on the headline. Oh, crap. Okay, wait. CPI month over month, 0.2. Wait, yeah, there it is, 0.2. It's also 0.2. Let's go. Okay, great. Oh, wow, this is crazy. CPI year over year comes in at 0.3. All of it comes in low. Nick T once again leaks it before. Once again, Nick T gets it right. Happens to leak the CPI data before because he gets it, probably just like J-Pow gets it. And they're like, make sure to temper the markets. Don't let markets rally. Nope, we going to the moon, baby. CPI month over month comes in at 0.2. CPI core comes in at 0.2. CPI year over year, excuse me, comes in at 3.0, and CPI core year over year coming in at 4.8. Every single one of those numbers coming in low. This is absolutely fantastic. Let's go ahead and get the actual report. While I do that, let's listen here for just a moment.
Well, and up 0.2 on the core is the lowest level going all the way back to February of 21 when it was only up 0.1. And if we look at year over year, up 3%. 4% in the rear view mirror. Well, 4% in the rear view mirror was the lowest level since March of 21. So when you see 3%, you have to go all the way back to March of 21 again, because that's where the comp drops from down to 2.6 is what we're comping to, and in the rearview mirror, 4%. And here's another one. If you look at X Food and Energy, last month was up 5.3. That was the lowest level since Nova of 2021. We breached 5% to 4.8.
This is great. Let's get into the actual report. This is phenomenal. Congratulations. This is great news, everyone. Knock on wood, this continues, but it's great news. Okay, let's get into the actual report. Here we go. Index for shelter was the largest contributor to the increases. Okay, listen. You probably haven't heard this yet. I'm going to give you a bottom line. The Wall Street Journal ran a fantastic piece. Bottom line, they said, if we didn't use the dumb, stupid, owner's equivalent rents for our shelter inflation, our core inflation would be somewhere around 30% lower than our core inflation is right now. In other words, we're stupid for using the data the way we do versus the way Europe does. If we measured our inflation the way Europe does, inflation would be over already. This is phenomenal. But anyway, this totally aligns with the Nike swoosh recovery here. Shelter inflation was the largest contributor to all items increase, accounting for over 70% of the increase. 70% of this trash CPI is just from the housing. And we know that's already rolled over for rents. With the index for motor vehicle insurance, that was a red flag coming up. Dude, Nick T with the leaks, man. JP Morgan called that too, though, with motor vehicle insurance. The food index also increased 0.1%. That's nominal. The index for food at home was unchanged. That's flat. Food away from home rose 0.4%. Not a surprise that you're getting that in the summer. The energy index actually rose 0.6% as oil has actually been trending up. And wow, you're still getting this total miss on CPI. This is fantastic. Let's get into some of the actual categories here. I want to get the individual categories here in full. So, okay, let's get this. Okay, here we go. We're going to get the full tables, and we're going to go through specifically which categories are burning here. So pulling this up right now. 1 second while that PDF loads. Remember, 2 weeks away from coupon expiration, and get that newsletter that we're doing now totally for free. Link down below. And course member shadowing discounts available at meetkevin.com now if you're a course member. If you're a multi-course owner, the discount actually goes up even more. So what do we have here? This is the CPI breakdown. I like to go to the back. Okay, here we go. Motor vehicle insurance. The right side is the month-over-month number we're looking for, May to June, seasonally adjusted. Oh, wow. Look at that plummet in airline fares. This is phenomenal. A crash in airline fares. Let's go. I hate airlines. 8.1%. Let's go. That is an 8.1% to the downside. Motor vehicle insurance still hot. 1.7%. An annualized figure times 12 is 20.4% annual inflation here at motor vehicle insurance. That is an ouchie wouchie. Motor vehicle maintenance and repair at 1.3%. This is a chicken or egg problem. Really, well, it should be motor vehicle repairs costing more lead to more expensive insurance. Wow, look at that. Transportation services, thank goodness, back to 0.1%. This was a red flag in the last CPI report. When we got 0.8, I was a little nervous. I'm like, wait, wow. But what happened here is airlines sandbagged the motor vehicle insurance increase, even though airlines have a much lower weight than motor vehicle insurance. That's great. Hospital services at 0.4, still a little hot. Physician services, 0.7, still a little hot. Owner's equivalent rent, still coming in at 0.4. But look at what's happening. It's coming down, folks. It's coming down. 0.5 to 0.4. Previously, this was 0.7, 0.7. So we're finally coming down in some of these numbers. Rent of primary residence still sitting at 0.5, also high. Therefore, the shelter index. Look at that weight on shelter, folks. Shelter, 34% weight here. This is crazy. You've got apparel at 0.3%. Actually surprised that's at 3.6% annualized. Used cars coming down. Yes, look at that. This is the leading wholesale indicators were that used car prices were coming in to plummet, and they finally are showing up in CPI. Let's go. This is great. Oil just broke $80, by the way, for the first time in many months. But it's probably because this is fantastic for the stock market. I mean, this should be fantastic. I mean, I don't know. Let's take a look in just a moment. Electricity up 0.9%, energy up 0.6%. Didn't seem to matter, though, as we really got an explosion here in terms of good numbers. I'm really happy about this. This is fantastic. I'm telling you, Nick knew it. You know JPOW can get these reports ahead of time. That shouldn't come as much of a surprise to you. But I wouldn't be surprised if you got a little text-a-doodle from JPOW going, hey man, don't let the market rally if it's just one good report. Because what a weird report, what a weird tweet. Nick T's like, hey, if we happen to get a good CPI report, remember, one CPI report doesn't make a trend. Come on, man. There is no better indicator than that. But as you can see here, this is phenomenal. NASDAQ in the pre-market is up 1%. Tesla up 3% in the pre-market. Enphase up 1.5%. NVIDIA up 1.44%. Intel's up 1%. Ubiquity up almost 2%. This is an undervalued play. If you're looking for a value play, do some fundamental analysis on Ubiquity. A lot of insider control, but that's because this company prints money and it's selling for less than a 1 peg. Trade Desk has been on an absolute tear, $82 over here. Bitcoin looks like it's trying to move on this as well, almost at 31K. Embraer is up another 2%. Apple's even up at 0.64. Snowflake is up a little. NEO 2.5. Let's see if we've got any. Dow Jones is almost up 1%. The Dow's like never up almost 1%. This is remarkable. You've got Domino's Pizza up 12%. SunPower up 9% here. Open Door is almost at $5. I called this with course members. I told them, I go, this is a $1.30 stock. This thing's going to skyrocket, even though I hate the company. I thought it was going to go to $2 or $3. I didn't think it would go all the way to $5. It's almost at $5. I'm like blown away. Like, I wish I put a lot more money in that. Oh, well, that's the thing about hindsight. But the leading indicators, the leading fundamental analysis was on point. Anyway, Zoom is actually down 4.7% here in pre-market. Redfin down 2.4, but these companies were also up yesterday. Actually, was it? Yeah, both of them were up. Redfin was up 23% just yesterday. I mean, here's your small cap revival coming back. Remember, Redfin bottomed at like $10 no, actually much lower this cycle, but during COVID. Now you're sitting back at $15 and then it just ran. Volumes for real estate agents still very low though, so I'm not particularly enthused about earnings for some of the real estate companies just because volumes are expected to be so low. But anyway, phenomenal CPI report. Let's get into the detail. So this goes even another layer deep in terms of what we could glean from this report. Tax preparation services, 1.8%. It's a little expensive. Financial services are up there, 1.6%. This right column, by the way, is our May to June, and then the prior three columns are all just the prior seasonally adjusted numbers here. So tax prep services coming in a little pricey here. You've got apparel and dry cleaning at 1.3. That's high. However, if you bundle it all together, once you include laundry and the other miscellaneous personal services, only at 0.1. You've got personal services at 0.4, driven by haircuts here. Actually, that's the only one. Haircuts and personal care, 0.4. Little high. Telephone services down 1.2%. Residential phone services, who still uses that? 0.2%. Postage, we did get postage stamps going up again. You know, I grew up as a I was born when postage was like 29 cents and, stamps were like 30 something cents throughout my childhood. Now I think it's like 65 cents or something. It's crazy. Anywho, education is actually down 0.3%. Admissions to sporting events up 5.5%. Yikes. That's a big number over here. CBOE volatility index hits a 1-week low down to 1406. So much for that cathartic blowout on the VIX that everybody was waiting for to step into the market. Just hasn't happened yet. Then you've got public transportation. Wow, 6.8% decline right there with that 8.1% airfare decline. Fantastic. Okay, motor vehicle repair. Unfortunately, that's where we saw still some heat. But it's not in body work. It appears to be in maintenance and servicing as well as repair, but not body work. That's only at 0.2%. Leased cars and trucks still up, but car and truck rentals down 1.4%. Phenomenal. Easier to... Finally, 3 months in a row here of declines in car rentals. Health insurance, decline. 3 months in a row of declines here. Hospital services, 0.4%. There's that darn household owner's equivalent rent, domestic services. That's hot at 1.4% here, but also very, very small weight on domestic services. Rent of primary, again, this is where you're getting some of the ridiculous numbers. Wow, look at that. We actually got a negative in lodging away from home. Holy smokes. Lodging away from home, specifically hotels and motels, down 2.3%. Now, I thought we were going to get a blowout here because of summer travel, but what would offset it would be seasonal adjustments. These are the seasonally adjusted numbers. Keep that in mind. You've got other goods, 1.1%. I mean, this is nothing, but you do want to be careful that you potentially get a reanimation of goods inflation, right? I don't really think so, but a lot of people worry about that. Wine at home, down 0.6%. Lauren will be happy. Alcoholic beverages away from home, 0.5% to the upside. Okay, what else do we have here? Alcoholic beverages at home, 0.2 to the downside. Smartphones still getting sandbagged, 1.5% to the downside. Education's down, negative 0.1. These are just great numbers here. This is a phenomenal CPI report. Remember like a year ago? And I'm like, I can't wait in a year from now. Hopefully we're looking at a CPI report that's mostly negative, like negative. It's here. It's kind of crazy. Newspapers up 0.3%. Who reads newspapers? Well, I do. Anyway, what else do we have here? Sports equipment down 0.3%. Sporting goods 0.3%. Oh, wow. Really? Look at this segment that's starting to roll over. I've been waiting for this segment to roll over. Absolutely waiting for it. Because you look at like the Petco and some of these other pet suppliers, they've actually still been seeing strengthening pet inflation, and it's been a concern. But take a look at this. Negative 0.5 for pet and pet products. Woof! Finally. New cars, new vehicles flat on new vehicles. New cars, negative 0.2%. New trucks flat. Used cars, negative 0.5. Fantastic. Infant and toddler apparel, 0.7. Oh, of course. As soon as I'm expecting twins, infant and toddler apparel goes up. Great. Girls apparel, though, is down. And these are twin girls, so maybe they'll grow into that downside of lower pricing. But infants, more expensive. Great. Okay, men's apparel, 0.4% over here. What else here? Women's outerwear and dresses, both negative. Housekeeping supplies, 0.1. Tools and hardware, 0. Dishes, flatware, 1.5. Appliances. Yeah, let's look at those durables here. Appliances, negative again, negative 0.1%. Furniture and bedding, 0.1%. Nothing over here. Household furnishings and supply, negative 0.3%. Price decreases over here. And then, of course, you had some of that energy push up. Eggs, folks. Look at the eggs deflation. Another 7.3% down. Milk is down. Fresh fruits up a little bit, but those are very volatile. Okay, wow. This is an excellent CPI report. Looking for some additional CPI or Wall Street reactions here. Let's go to the Wall Street reactions quickly. Reminder, courses on building your wealth. We got 2 weeks for the next massive price increase. This is going to be a big price increase, adding a lot of value to the courses regularly. And make sure to check out that you can now bundle up the Shadow program if you're a course member, large discount. And you can see that at meetkevin.com. So it really incentivizes a reward for existing course members and potentially new course members. And then, of course, check out the free newsletter where you can get daily insights from me by either clicking the description on YouTube right now or looking at my reply tweet on Twitter. Just go to my profile, Real Meet Kevin on Twitter, hit replies, and it's the first one there. Okay, let's see here. Cycle high yields are likely to hold. Okay, the legitimate case for the Atlanta Fed boss. Okay, wait, hold on. As expected, today's CPI print added fuel to a recent bond rally by taking away the tail risks for rate hikes. With the month-over-month headline and core numbers both coming in at 0.2, there's a legitimate case for the Atlanta Fed's holding for a rate pause, basically, or holding longer. Wow. Rates tumble as traders abandon a second rate hike. Fantastic. Okay, great. Dollar tumbles. CPI falls short of forecasts. Oh, this is great. I want to get some specific CPI insights. Let me also look at the 10-year, and then we're going to look at the 5-year break-even. Pre-market. Oh, yeah. I mean, all the indices are up. I mean, Dow's up 0.6, S&P's up 0.8, NASDAQ's up 1. You've got the 10-year Treasury down 6.3 bips. Let's look at the actual CPI report for June. Analysts here, or analyst result here. Let's see here. Looking beyond the July meeting for a moment, these numbers will make the speech at Jackson Hole a lot more crucial for setting the future of policy. Oh, talking about Jackson Hole again. Great. I didn't like Jackson Hole last year. That led to a hard one. Anyway, Bill Dudley, former president of the New York Fed, said this opens up the question of whether July will be the last rate hike. Ooh. Fed will take some comfort in the fact that core service CPI, ex-housing, has slowed below 4%. Oh, this is such a good chart. I want to show this chart to y'all. Stand by for a moment. I want you to see this rollover. Remember, this is the opposite of what's happened at the United Kingdom, where you had this resurgence of inflation in the UK. We do not want to see that here. So I'm going to pull this chart up and describe it for those just listening. But basically, here's a chart of core services ex-shelter inflation. So stripping out shelter and just looking at what those core inflation numbers are doing. What do we got here? We've got a core inflation coming down from a peak ex-housing of around 6.8% all the way down to just under 4%. This is a very, very good chart. We're going to look at those 5-year break-even expectations in just a moment. You are right to ask about it. I want to see it too. I really want to see it go to like it. This, in my opinion, well, let's just look at it now. In my opinion, it should probably drop it to 2.1, if not even lower. So yesterday we were at 2.2. I usually have a little bit of a lag in getting the 5-year break-even inflation, but it should have updated now. So I'm going to guess if I could get a 2.09, I'm going to get very excited. Like under 2.1 would be very exciting. So let's see what we get. 2.15. So it did drop substantially. I'll show you, I'll zoom into that chart at that bottom right corner here. It is falling still. So let's see here. Here it is on screen. You can see that plummet. Still on the lower trend line. We were talking about this yesterday. You're still on that lower trend line though. So we haven't broken that. So if I draw a trend, you can see you're still in that rising path. If we break to 2.13, 12, we're gonna break that trend line. And if we hold under it, hopefully those 5-year break-evens really start going down, and that's going to mean the Fed's going to start pricing in the pause officially and cuts. Let's look at the Fed term rate expectation. Yesterday we were at 5.36. Which was fully pricing in the next rate hike. I would argue that this should be 5.34, 5.322. A nice drop off. Okay, very good, very good. And if I go to the rate monitor for the FOMC rate, right now we are looking at exactly 2 weeks away from the next Fed decision. That means we're also 2 weeks away from the expiration of that coupon code. Email us at staff@meetkevin.com if you have questions. Still pricing in a 91.8% probability of one more hike. However, the odds of going to of staying stable, actually those have remained stable so far, 73.4%, although a little bit more on the pause side. Okay, looking at a bit more, a lot of talk about higher food prices affecting consumer psychology, but inflation in food is becoming less of a story. Meat, poultry, fish, eggs dropped 0.4% in June. Regardless of where you sit on the Fed debate, inflation decelerated in June to the slowest pace in more than 2 years. Question now, is this a genuine turning point? Nah, it's a Nike swoosh, baby. Ooh, that was a good one. Got him. Everybody's like, it's going to be this rapid U-turn. It's like, nah, man. It's going to be slow. It's going to take time for people to realize inflation truly was transitory. Ooh, I'm still going to piss people off for saying that. Whatever. I say stuff to piss people off every day, and I sincerely do apologize. But I stopped caring. So, $1 101.15, nice little drop there from 101.14. Housing costs accounting for 70% of this CPI increase, absolutely insane. So look, I mean, this is phenomenal. This is absolutely phenomenal. This is great. By the way, if you ever want to intern for me, send an email to jobs@meetkevin.com with a 1-minute video, and you can intern for us potentially. We've got a really amazing group right now. And we're very excited about the many differences or many different businesses that we are expanding. We have a lot of fun every single day working on all of them. So if you're interested, you have to work locally. No remote, sadly. All right. So this is great. It's a great CPI report. Thanks for watching. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced